Great. So obviously it's the pause that has brought this relief to the market, but we don't know if it's temporal or if we're building on this going forward.
Well, during times of war, there are always truths. And so the ongoing economic war isn't an exception. I totally regard the 90 days tariff pause as a signal of a temporal truce that's going to allow different sides to go back to the drawing board, negotiate, and also re-strategize before this ongoing global tension escalates to something beyond control. Especially US and China. If you see the tariff that was put on China and China reciprocating, it shows us that it actually tells us what everybody knows. China is the main shoe. But yes, this pause is a big deal. The market hit uncertainty, and then this pause is giving investors a sense of relief, even if it may be short-lived. But we're already seeing some positive reaction. Short sellers get liquidated. Billions of dollars have been added into the market. But this is giving investors hope, and we are kind of hoping that this should lead to a more stable negotiation down the line, and also a convergence of the possibility of a rate cut 2 to 3 months from now, because much is in Jerome Powell's court. But in the short term, this is going to boost investors' confidence. And yes, it might continue to trigger some market rallies, but investors need to remember that this is a pause and not a permanent fix to the global trade tariff war.
So what should smart investors be doing within this 90 days?
Okay, here is the thing. During times like this, disciplined investors always win. This reminds me, last year during the summer drawdown, I had a friend who had about 100 million naira invested in the market, and he sold at over 19 million naira loss. The thing was that 3 to 4 months down the line, everything went back to normal. And the market did not just went back to normal. We had an all-time high, but he had already lost 19 million. So the thing is, what's the lesson? Volatility is part of this game, but that doesn't mean that investors should panic or sit on the sideline. I think instead, smart investors should stick to their market strategy and then investment plan. There are always two kinds of investors in the market, the active and the passive investor. While the active investor follows the market 24 hours and makes decisions based on what's happening in the market, the passive investor knows what every political leader and business leader knows. If President Trump doesn't deliver a positive outcome on the reason why he started this tariff war, someone else will have his job. So tariff means a bumpy ride on the short term, but eventually long term, everything looks bright. So smart investors should understand dollar cost averaging into most solid and reliable crypto asset is a powerful move. They also need to diversify your holding and cut down exposures into high-risk driven investments and look more like value-driven crypto assets, especially those that will stand to benefit from easing of trade war on the long term. So short term, I think that smart investors should be prepared more for a bumpy ride, but then long term, the future looks bright.
All right. Thank you so much for that positive message right there, at least for the long term, Gilbert Joekpata, financial market analyst.
Yes, thanks for having me.